So we have a huge shakeup in the top 10 retail stocks that were bought by us, and although it's not perfect, we look to finally have our heads moving in the right direction as some new stocks entered the list and some garbage finally fell off. So let's discuss the good and the bad from this list. Like I said, we got some new stocks on there finally, some old crap fell off. Let's discuss all that from a long-term buy and hold investor's perspective. Just make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today, guys. And the holiday sale for my group is ending this weekend, so we'll talk more about it about the end. But if you want to see all my buy and sell alerts in real time and watch list with price targets, get your free coaching, free courses, all the other good stuff, it's the pinned comment down there. But again, we'll talk more about it at the end. But let's get down to this list right here. And the one thing I want you guys to keep in mind, this is not my list of the top 10 stocks that I would buy. All right. I made a top 5 list of what I think was going to be the best winners this year. I'll link it right up there if you hadn't seen that one yet. And maybe we'll do some other top lists that I particularly feel are better stocks. But right now I'm looking at what we are buying in whole en masse as a retail investor. This is our list, not Luke's list. Okay. So I just want to make that very, very clear. There's always somebody that comments that, hey, why did you pick these 10 stocks? Why are you, it's like, hey, it's not my list, guys. I'm not making it up here. Okay. These are the top 10 retail stocks that retail investors bought over the past month there. So basically in the month of December here, these are the stocks that we bought en masse. So stock number 10 is Meta. Now, you guys know for me, this one's a pump it. I love Meta. I've loved Meta before it went on its dramatic fall in 2022. I've loved it after the fall. Obviously, when it fell, I couldn't buy enough Meta. I just think it's a great company all the way around. There are so many profit levers to continue to be pulled by Zuck in the future there. You don't understand this. It already prints money, first off. That's one key, is it prints money currently. And he's still blowing a bunch of money on the metaverse and all the other good stuff like that. So if he happens to solve that, there's a lot more money coming. But even then, things like WhatsApp and a lot of other things like that, they haven't truly monetized yet. Those are all levers that they can pull in the future for massive profits. Now, I know here in the US, we kind of go, WhatsApp, not very many people use that. Go anywhere else in the world, and WhatsApp is critical to so many different things, to include your doctor's visits and some other things of that nature. It is amazing how much the rest of the world uses WhatsApp. Just hasn't quite caught on here yet. Don't know if it will or won't. No idea. Not really here to kind of judge that. I just know the market is already massive in order for them to monetize that as well. And of course, advertisers are slowly moving from traditional TV, advertising, print advertising, all that sort of stuff. That is dying. And the best 2 places to invest are Meta and Google in regards to digital advertising. They're not even close. They're one and 1A, and everybody else is a distant second. So that's why I love Meta. I'll continue to love Meta. Yeah, the valuation, I wouldn't even call it expensive right now. It's probably right around fair value, maybe a touch stretch, but it's not ridiculous like it's been in the past. And it's just a great company overall. So for me, it's absolutely a pump it. So stock number 9 is GameStop. Oh yeah, let's go to the opposite of the spectrum here, and a stock that I want nothing to do with, but yet it's one that we still consistently buy, and I don't understand why. Now, full disclosure, AMC actually fell off the list finally. So, okay, I guess the apes finally figured out it's not going to happen, or at least enough people quit believing in the ape narrative that $100,000 per share is coming imminently. You just wait for that ultimate, Sigma, Gamma, Lima, squeeze, whatever. I don't know, whatever the heck they say is going to happen there. That hadn't happened over the course of 4 years now. So I'm not sure it's coming. I don't know. Could be wrong, I guess. But anyways, we finally kind of moved away from that one and moved some good stocks actually into the list right here. But GameStop is still hanging on there. Again, there may be a trade there. You guys know a lot more about that track that than I do. I don't know anything about that. I can just look at company fundamentals and know it's not something that I want to own from a fundamental perspective. And so for me, it's an absolute dump it. Hadn't wanted anything to do with it for a long time. Every once in a while, somebody wants to argue with me about it. Hey, that's okay. I like the gains I've gotten in a lot of other plays on this list than GameStop could ever return me, in my opinion. So happy to dump that one. So stock number 8 is Disney. Okay, so you guys know I own a little bit of Disney there. I was able to buy it down in the $70 range or so. But I always give the same caveat with Disney. I like the company long term, but you got to have caution with the stock because they have business problems. Don't care about the political nonsense. They have business problems because that's what matters over the long run in the stock market is business problems, and they have to solve them. And so far, they've done some good things, but not near enough to move this into the pump it category for me, to where I feel like unless you're just getting screaming deal pricing like we got back in the 70s, for me, until we get that sort of pricing again, or they start to make more, more progress on solving a lot of those business problems, This one to me is firmly, you got to just have caution with it and just be very, very careful with it, because until they solve those business problems long term, Disney really can't get any sort of sustained run going in the stock there. Of course, there can be short-term moves. I'm not a trader, so I have no idea what they are. But in regards to owning this one long term, for right now, it still fits soundly in that caution category. So stock number 7 is Palantir. Now, I'm going to caveat this one right here with 2 parts. One, I am really, really excited that Palantir finally made it on the list. I've been asking for you guys to buy this stock now for over 2 years, and it finally made the list here, basically the last month. Unfortunately, over the past month, it was at all-time highs. It was at up around 80 bucks or so, which for me, we needed to be buying that stock. And I know right here on this channel, we were buying this stock ad nauseum since 2022 in that $6 range, all the way up to around $15 or so. My last shares I added last year in the low $20 range. That right there, I mean, we had 2+ years to buy the stock and we didn't want anything to do with it. We were busy buying a lot of other junk that's on this list instead of a stock like Palantir. And now all of a sudden Palantir makes a big entrance into this list all the way down to number 7, but when it's at all-time highs. And that's why, Wall Street and a lot of other folks mock us that we always buy high and sell low, because that's kind of what we just did, right? We just pushed the stock on the list, not just to 10, all the way down to number 7 out of nowhere, essentially, because it wasn't even on the list last month, the month prior, but it was right there at those all-time highs. And if this stock continues to fall, like it's been doing right here at the beginning of January, I have no idea whether it will or won't fall further. I'm not here to make short-term predictions, but if this stock continues to fall over the course of January here, it's going to be very interesting to see, does it stay in the top 10 next month whenever I review this numbers again? I'm not sure that it will if we follow our pattern of course, buying high and selling low. I hope that's not the case. I really, really hope that's not the case. And if it is the case, at least I hope it's not the viewers of this channel right here. I hope you guys have been buying prudently over the past 2 or 3 years, buying this stock, just consistently either DCAing into it or doing that modified DCA, buying it every single time it's undervalued, because you should own a crap ton of shares, kind of in that, $20 to, $6, $7, $8, $10 range or so. That right there is where we should own the bulk of our shares. And of course, if Wall Street continues to be down, that right there will give us another opportunity to add to a great stock that's going to be great long-term. So for me, of course, I think this is absolutely pump it. Obviously, you got to be cautious with it right now because the valuation is extremely high, but I'm extremely excited about this stock long-term. But I just have that concern that, oh gosh, did we do it again as a retail community, as retail investors as a whole? Did we buy high and then I won't see this stock on the next month whenever it was, I don't know, $10, $20 cheaper, whatever the number ends up being, and we didn't want it anymore. So that kind of tempers my excitement there with Palantir being on this list. I hope that I'm wrong, and I hope that it actually moves up the list if the price continues to fall. So stock number 6 is Microsoft. Again, just one for me, pump it, great company, great business. Glad we are consistently buying great companies, just kind of month in and month out, steady as can be. Obviously, I hope we do that with Palantir too, but no promises yet. We got to prove it. But with Microsoft, we've absolutely been proving that. It's, maybe trading a little bit rich right now, but it's not ridiculously overvalued or anything of that nature. Again, it's a great company. Just make sure you understand the company, understand the valuation, understand what you're buying. But I think long run, obviously, Microsoft's going to be bigger 5 years than it is today. So Microsoft is absolutely a pump it for me. So stock number 5 is Ford. And here we are. Yeah, we can't seem to get rid of all the junk here. It's Ford. It's a dump it for me. Just the entire financials are just a disaster. Albatrosses everywhere across that, landmines everywhere across the financials. It's just not stock that I ever want to deal with. Some of you guys have commented in the past. I wonder why it's on this list every month. Some of you guys have commented there's some sort of a trade or something else going on with it. Okay, fine. Again, I'm not a trader. I'm a long-term buy and hold investor. From that perspective, there's absolutely nothing there with Ford, nor with their financial situation, unless they're able to file for bankruptcy, restructure a lot of things, something of that nature happening. I just don't see how the stock can go on any sort of justified sustained run. Can I have a hype run? Sure, any stock can. But in terms of it being a great long-term stock where I'm going to make a lot of money on it over the long run, there's a lot better horses to buy on than Ford. So for me, it's a dump it style stock. Number 4 is Amazon. Again, this stock for me is a pump it on any weakness. Amazon is a great business. They're growing. Not everything they touches turns to gold, but the vast majority of things they decide to get involved with, they may not be number 1, but they immediately go to, one of the top 3 or 4 in every single thing that they touch. And remember, you don't have to be number 1 in everything in order for it to print a lot of money to your bottom line and make you a lot of money as shareholders. And you think there's going to be less Amazon packages on everybody's doorstep 5 years from now than there is today? I don't think so. That pace seems to be accelerating with everyone. And as they move into more and more business, businesses, that means more and more packages are going to be showing up on our doors. Who knows what else they're going to get involved in? Obviously, they're starting to get involved in healthcare now. That right there will be interesting to see how they navigate that. So there's a lot of different things, a lot of different levers to be pulled for Amazon moving here in the future. Definitely one I own the stock, own a lot of the stock. I will happily buy the stock, especially if we get a significant dip in it. It's a great business, has been a great business for a long, long time now. And so for me, Amazon is absolutely a pump it. Number 2 is Nvidia. Now, Nvidia made a huge move up last time, but the stock was already on a dip then. So it looks like we just continued buying the dip into the following month there in December, obviously here into the beginning of January. So that right there is a good sign that we obviously feel very, very strongly about Nvidia, about the future of Nvidia. And we were buying that dip heavily because it pushed it all the way up to the number 2 spot there. You guys know for me, it's a pump it stock. It's one of the best companies in the world out there. I can't say enough good things. I'm not sure I've ever seen a run like Nvidia's been on, and they continue to push that envelope quarter in and quarter out, new products, obviously actual numbers, not projections, not future hype, not this could be this could be that, actually giving you numbers to follow up behind everything that they're doing in the earnings quarter in and quarter out. So I'm very, very excited about Nvidia. And obviously for all you guys out there, shareholders, you're getting a dip on a great company, a great stock, probably at a very reasonable valuation right now. I haven't checked it yet, so somebody please go check it and let me know down in their comments. But the last time I had looked, whenever the stock price was higher, the valuation was not that ridiculous for Nvidia, especially whenever you look forward out the next year. So for me, it's absolutely a pump it. It's a great company overall and a great stock to own. And to number 1, and that is Tesla. All right, you guys know it always kicks up a lot of controversy there in the comments. I am a Tesla bull. I have a character on my channel called the Tesla Bull. I love Tesla stock, but Tesla stock is a touch overvalued right now. But that doesn't make it not a good buy either. I'm very, very glad we were buying the stock, but it kind of almost feels like a Palantir situation where it went on a massive run at the end of the year there. And obviously it climbed up the list accordingly as it continued to run. But are we going to buy the dip in Tesla if it dips here in January? You know, for me, the simplest strategy with Tesla is just simply to DCA into it. But if you want to use price targets like I do, it's a lot harder to do and you got to be a lot more patient. But Tesla's the type stock that gives you opportunities. Think about last year. Think about just really the last, 6 months last year. You got the opportunity to buy Tesla down in the 140s, and then all of a sudden it's up over $400 per share in that time frame right there. That's the kind of moves you can get in Tesla. And if you go all the way back a full year, I think it went all the way up to like 260, 280, fell all the way down into the low 140s. I think it actually got in the 130s, and then right back up to 400. That all happened within a year. That's kind of Tesla stock, the Tesla roller coaster, whatever the heck you want to call it, in a nutshell there. So for me, I play the modified DCA game. I already own a full position, plus bonus shares, plus bonus shares, plus bonus shares. So I tend to play the downside of those wild roller coaster rides. It's not a straight rocket ship up, especially with Tesla. It's this wild ride up, wild ride down, end of the world, wild ride up again, down again. Elon tweets something silly, goes down, great earnings, it shoots up. It's all over the map there, guys. It's part of the Tesla journey there. That's how I choose to take advantage of it and keep my average really, really low. But for the vast majority of folks out there, especially because the stock tends to be very emotional for folks as well, it's absolutely just the best candidate for just doing a DCA and moving on with life if you want to own a lot of Tesla shares in your portfolio there. So for me, it's a pump it, but it's a caution right now because it is overvalued. But I think there's some good things coming this year in regards to Tesla that's really going to help out that valuation. Obviously, that low-cost model coming there in the second quarter. A lot of the other things that are more speculative that everybody likes to argue with me down in the comments about. I don't know. I've been having the same argument now for 5 years, and well, so far it's worked out in my favor, me not including that in my valuation. So I've always been able to buy really cheap shares, build out a much larger position than I ever wanted. And obviously I'm very, very happy with those results. And hey, if that makes me, quote unquote, naive or dumb or silly or whatever the case is, or a bear, I guess so. I don't know. I don't know how you can be a bear and own a bunch of the stock at a really, really low price. I just call it being a prudent investor, but everybody has their own opinion there. That's okay. So for me, it's definitely a pump it, but you got to have caution with it, in my opinion, of course. And if you want to learn exactly how to execute a strategy like that on Tesla, so that way you avoid buying at $400 something and instead you're buying down in those 140s, and you want to get free coaching on that, take 5 courses for free, be a part of the best 6, 7, and 8-figure Discord out there, get a free stock analyzer tool you can use, and so much more. Make sure you check out the pinned comment, guys, because that holiday sale is ending this weekend, and when it's done and the price goes back up. So check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.